On the US oil, we had a couple of sell positions yesterday, though price action was quite choppy as we saw this old situation where price had continued to range within this new structure between the $75.75 area and the $75 level. So let's see what we were looking at yesterday. What was our expectations? What did we see on this chart that insinuated that we sold the US oil during the New York session yesterday? So during the live session, we identified this simple setup where we observed how price action had been caught within this simple structure between the $72.60 level, $76.20 level, and then the $75.75 area. And at this point yesterday, we were looking forward to either a breakout of that channel or a breakdown of the channel for trading opportunity. As you all know, whenever we have this kind of simple flat channel, we want to see price action break out of the resistance line to give us a buy opportunity, or break down the support line here to give us a selling opportunity in this market. And during the live session yesterday, I told you how I took advantage of the sell position after the breakdown of the structure. And one thing we decided here yesterday, especially for those who had missed out on this opportunity, I decided that we are not going to be jumping in front of a moving train, as we want to see price action evolve into a setup that will give us another chance. And part of what we were looking at yesterday is the potential of price action coming back to retest the $75.75 level. Remember, this was our support line for the week, and we were looking forward to price coming back to retest that structure. And that was exactly what happened here, as we saw multiple retests of the structure, giving us quite a lot of opportunity to be part of a selling move to the downside at that point. And if you are taking advantage of that move, you would have witnessed a 60 to 70 pips move before this whole consolidation phase happened. And so at this point in time, we have a situation where price is quite choppy right now, further emphasizing the indecision in this market. And for those who are taking advantage of that sell position, well done to you guys. And if you still have the sell position running at this point, I will be advising you to move your stop loss and secure that current position at probably your entry point, and let's see how price action will be playing out from this point. So well done once again, and in that regard, we shall be diving right into what to look out for on this chart ahead of the New York session. So the first thing I will be doing right now, before we go into the details of what to look out for, is to scale up into the daily time frame. Let's have an holistic point of view here, as the whole consolidation phase I am seeing here in the last 24 hours is a sign that something interesting is building up behind the scenes, and we want to ensure that we position ourselves in such a way that we can catch whatever direction price action might likely be going for today. So scaling up into the daily time frame here. So this is the daily time frame. Excuse me. So what we were looking at here yesterday, we had this whole structure figured out. First of all, acknowledging the fact that price action has been bearish since the month of July last year, and to further emphasize the bearish momentum in this market is this trend line here, after we connected this series of lower highs in this market to give us that resultant bearish trend line. And this also confirms how sellers had continued to dictate the pace here in the last 8 months in this market. However, things got a little bit interesting at the beginning of the month of November, as we saw that since then price action has been caught within a range between the $82 mark and the $70 area to give us a level of indecision in this market. And with this whole situation here, you know what we look out for whenever we have a channel like this. We want to see price action break out of the channel to the upside for buying opportunity, or a breakdown to this downside for selling opportunities. But as you can see, we are yet to see a significant breakout retest of structure to confirm a direction at this point, as price action is still trading within that range. Though we had an attempt by the buyers to break out of the structure here at the, I think the second week of last month, we saw that attempt, but it didn't last long here, as we saw how sellers came in again, respecting that bearish trend line one more time to incite this bearish move that we have been enjoying in this market in the last 2 to 3 weeks at this point. And one thing we also emphasized here during the live session yesterday was the fact that the bearish momentum that we saw that began here might likely be a retracement of the impulsive move to the upside that started in the month of March. So the question we were asking yesterday is, how far will this move go to culminate that retracement phase and probably get us prepared for the second wave of the bullish momentum? And so with that view in mind, we used our Fibonacci retracement tool to project the potential area where the retracement phase might likely end, and at the same time that area will be serving as our potential demand zone to be part of a bullish momentum if we start seeing a reversal pattern around that area. So what we did here was to bring out our Fibonacci retracement tool, then we ran it through the previous impulse leg as you can see here, and we aimed at an area within the 50 and the 78.6% of the impulse leg, which gave us this yellow window you can see here. And one thing we said here is that as long as price action remain within that area, we're still within the profit target for the sellers. And at the same time, if we begin to see buy pressure resume around this area at any point in time during the course of the week, then we might likely be getting ready to buy. And what I said here, let me give you a visual representation of what I'm talking about. So I said price coming into the zone, if we start seeing structures like double bottom structures, buying pressure, signs that sellers are finding it difficult to find lower lows in this market, in this area, then we'll have no choice than to get prepared for another wave of bullish momentum. However, things have been quite a little bit bearish since the beginning of this week, as if you scale down to a much more lower time frame, you will begin to see what has been going on here. So I will scale down into the 4 hours time frame. So we saw this whole setup happen on the 4 hours time frame. First of all, we acknowledge the retracement phase which has been happening here in the last 3 weeks. And funny enough, this retracement phase has evolved into an interesting structure in the form of a descending channel after we connected the series of lower highs and lower lows. We have this descending channel figured out here. So it's very interesting that we have a setup that we can actually use to guide our trading activity going forward. Now, with this whole situation we had here, we saw our price action close just right below the $77 level during the course of last week's trading session, just right exactly had the resistant line of that descending channel to share a confluence with a $77 area, which happens to be our key level for the week. Then we also observed this bearish gap. So it gave us a sign that during the course of the weekend, there was some transaction going on which tends towards a bearish bias here. And the week actually started on a bearish note. Now, one thing we observed since in the last 24 hours in this market, despite the fact that we had the week started on a bearish note, we realized that the $75 area had continued to negate the attempt by the sellers to break down that structure, giving us a clue that buyers are present around that area. So right now, as we go into the New York session today, we are going to be including the $75 area, a very strong psychological level that is, considering the round figure of that price, to be part of our parameters to guide our trading activity for today. Now, when we scale down further into the 1 hour time frame, things become a little bit more clearer. So I will zoom right into the current structure. So this is what we have here. And look at what happened. What happened since the beginning of the week. We saw how price action started the week at the $76.20 level, and since then price action has dropped, so it has been bearish actually. But as soon as price got into the $75 area, we saw how that level had been negating the attempt by the sellers to break down that structure. So at this point in time, we will see this as a sign that buyers are present, and there is a likelihood that we could be having a breakout of the resistant line of that descending channel to give us a signal of a bullish momentum this week. So for me to buy the US oil spot for today, I would want to see price action climb back above the $75.75 level, break out of that resistant line of that descending channel we identified on the daily time, on the 4 hours time frame, to be part of this move to the upside. So to prepare for that, we want to have a buy stop order above the $75.75 level, have our stop loss anywhere right around the $75 area, which will be dovetailing to about 60 to 65 pip stop loss there, and let's see how this bullish momentum will go going from that area. And if price action goes on to break out of the $76.20 level, which happens to be the highest point price action has been for this week, then we'll be looking out for more opportunities to add more position to our existing trade. So let's see how this plays out going into the New York session today in terms of a bullish expectation in this market. And remember that we have our key level at the $77 area, which also a breakout of that level will be welcoming more opportunities to buy. And one thing about the key level is this. Remember, we identified the key level here at the $77 area to be serving as our yardstick for trading activities for this week. And that same level had been a demand zone at one point during the mid-month of April. Now look at this whole situation. You can see how that level is a key determinant of price action, at least in the last 2 to 3 weeks now. It has been a key determinant of price action. It was initially a demand zone before the breakdown of that structure happened mid last week. Now we saw price action came back to retest that structure. So if it so happens that this bullish momentum continues and approaches that $77 area, we want to ensure that we secure all the buy positions we have prior to that moment. Now, it now depends on how price action reacts to the $77 level that will determine if we are going to be adding more buy position or getting ready to sell. So if price action gets into the $77 area and we begin to see selling pressure, probably price action evolves into a reversal pattern like a double top structure or a head and shoulder pattern, then we might likely be in for another wave of bearish momentum to the downside, as this is going to be serving as a very strong selling niche since the breakdown happened last week. But if price action breaks out and buy pressure continues above that level, then we look out for more opportunities to add more position to our existing trade. So that is how we are going to be buying the US oil spot for today. And then there's one more thing here that I was able to spot that we can also use to guide our trading activities going forward. And in fact, it would help us to feel comfortable in whatever position we are in. And that is the trend line that you can see here. So what I did was to connect the series of higher lows, at least since last week's trading session. We have been citing these higher lows here. So ever since price action tested the $74 mark, we have been seeing buy pressure, and since then price is yet to come back into that structure, hereby giving us a situation that looks more like a higher low. And from a technical standpoint, whenever we see price action evolving, finding higher lows in the market, it is a sign that buyers are gradually gaining some momentum behind the scenes. So what I did here was to connect the series of higher lows to give me this beautiful bullish trend line, which definitely will be serving as our yardstick going forward. And what do I mean by that? So as long as price remain above the trend line, we shall feel comfortable in a buy position here. So like I said, we are looking forward to a breakout of that $75.75 level, which also shares a confluence with the resistant line of the descending channel we identified on the 4 hours time frame. So if that happens, then buy pressure above the structure will be welcoming more buying opportunity in this market. And as long as price remain above that structure, we continue to look out for more patterns that support a trend continuation so that we can add more positions to our existing trade. Now, in as much as we are looking out for buying opportunities in this market, you all know what we do here. We don't want to put all our eggs in one basket. We want to be as dynamic as possible so that we can be part of any move if the market decides to change direction at any time. So in this kind of scenario that we are looking out for buying opportunity here, we cannot ignore the potentials of the sellers in the market. So what do we want to be seeing on this chart that will give us the confidence to sell the US oil for today? Now, since we already have the bullish trend line that we said we are going to be using to guide our trading activity, if at any point in time during the New York session today we have the trend line broken to the downside, then at this point we shall be seeing this as a signal that the trend line may no longer be strong enough to resist the selling pressure. And one interesting thing about this bullish trend line is the fact that it also shares a confluence with that $75 area, which happens to be that buy niche we have identified in the last 24 hours. So you can see how the $75 level, which has been a strong buying niche in the last 24 hours, also shares a confluence with that trend line. So if a breakout of both of the structures happen, then at this point we want to be seeing this as a signal that sellers are gradually gaining momentum. But remember, we are not getting too excited here to join right away, as we want to see some confirmation to happen before we join that sell move. As you can see here, in the past we had situations where price action in fact broke down that structure multiple times before it climbed back to the upside. So we need some confirmation that will give us that evidence that buyers have finally lost it at this point. So what we are going to be looking out for is a retest of structure. Price will come back to do the retest of the $75 level. Mind you, this whole observation is going to be done on a lower time frame, like your 10 minutes, your 5 minutes, or your 50 minutes time frame to look out for this kind of setup. Look out for a retest of the $75 area, or the trend line that was broken to the downside, and most importantly, we want to be seeing selling pressures giving us signs that buyers are finding it difficult to climb above. And if this whole setup is formed and mature, then we can now have a sell stop order below the $75 area to be part of the bearish move to the downside. And another caveat to this whole structure here is the $74 area, which happens to be a very strong demand zone. At least during the second half of last week's trading session, we saw how the $74 level had been a strong demand zone in this market. So as soon as price gets into that area, we want to be moving our stop loss to secure all sell position, as we want to wait and see how price action will react to the $74 area to determine if we are going to be adding more sell position to our existing trade, or we are going to be getting ready to buy. So if price action breaks down the $74 mark, then at this point we look out for more opportunities to add more position to our existing trade. However, if buy pressure resumes above the $74 level like it did last week, then we will have no choice than to look out for buying opportunity from our lower time frame. So this is how we are going to be trading the US oil spot for today. So we have two setups, two key levels that we are going to be using to guide our trading activity. We have the $75.75 level, which if price action break out of that structure, it would have broken out of the resistance line of that descending channel we identified on the daily time, on the 4 hours time frame, to give us a clue that the resistance line could no longer resist the buy pressure in this market, and that would be a beautiful sign for us to be part of a bullish move. However, if the contrary happens here, price action breaks down the trend line, this bullish trend line we have here, which also shares a confluence with that structure at the $75 mark area, then at this point we want to see this as a momentum shift. And I laid emphasis on this here, that we are not jumping right away, as we still need some confirmation to happen, which we are going to be looking for on a much more lower time frame. Look out for a retest of structure, selling pressures giving us signs that buyers are finding it difficult to climb a new high. Then at this point we can be in for the bearish move. So that is how we are going to be trading the US oil spot for today. If you have any questions, let me know write in the comment section.